Hi, good morning and welcome to ET Now. You're watching Buy Now, Sell Now. I'm Varun Hirimat and along with me is Cheryl D'Souza. We're joined by a very special management this morning, Cheryl. We have the CFO of Bata, Mr. R.K. Gupta with us. Good morning, sir, and thank you for taking out the time to talk to us here on Buy Now, Sell Now. Of course, there's a lot to discuss with you and touch base on, but let's begin with the demand scenario. How is overall demand currently panning out compared to the recent months that have just gone by? And how far are you exactly from pre-COVID levels?
Demand and recovery is shaping up. If we compare in last two quarters, means quarter one and quarter two, for sure demand is increasing. But if you ask whether we are at pre-COVID level, answer is we are still far away. We are hopeful that by end of next quarter, we expect to achieve pre-COVID numbers.
Right, Mr. Gupta, that's heartening to know. And are you witnessing a pickup across categories, or is there any special category which is standing out? Also, how are the footfall trends been recently?
Footfall, again, if you compare against pre-COVID level, not at par. But if we compare against previous quarter, yes, for sure these are increasing. Up till last quarter, means July, September, more or less malls were not open. In this quarter, October, December, most of the malls are open, and although customers flow is less, but they are moving. As far as categories are concerned, means dress shoes, casual shoes are not at par, but low price merchandise, open chappals, open category, they are giving fruitful result and they are as per our expectations.
Good morning, Mr. Gupta. This is Cheryl also joining into the conversation. Let's talk about rent and other expenses. If you look at them, they've actually reduced considerably during this period. But as things normalize, could we expect these to go ahead and impact your margins? What's your outlook for the margins going ahead then?
We are working towards improvement in our margins. For sure, in this quarter, there was some pressure. This was due to promotional offers, some additional markdowns in our stores. Factories were not working at their full capacity. Thereby, we were making some under recoveries in our own manufacturing units. However, going forward, now factories are working at full capacity. Markdowns are no more in the market except some categories. We are expecting a considerable growth in our margins in the coming quarters.
All right, Mr. Gupta. Also, what's the percentage of sales currently, how much percentage of the sales actually currently comes from the e-commerce channels? And what is the growth in sales through digitally enabled platforms going forward? What's your outlook on that particular front?
In fact, with the help of induction of B2C business at digital platform like Myntra, Amazon, etc., there is a decent growth in our e-com business. We are expecting that this turnover will constitute around between 12 to 15% of the total turnover.
Right, Mr. Gupta, and could you tell us how the demand is faring across your various tiers? So tier 1, tier 2, tier 3, tier 4, and then is urban now also seeing a sharp pickup?
You see, means up till last quarter, demand in urban was less as compared to demand in tier 3, 4 and 5. Means as we discussed, low value merchandise are selling much more as compared to the previous quarters pre-COVID level. However, means now since malls are open, customers are going to their office, to their workplace, demand in urban also increasing. And we expect that by end of June, demand will come to the normal pre-COVID level, whether it is urban or smaller towns.
Right, sir. So then will you be expanding your footprint in the smaller towns in tier 3 and 4 to capture higher market share?
You see, in 2020 also, means last year, in spite of COVID-19 pandemic, we have opened around 60 franchisee stores, mainly in rural areas. Same trend will continue in 2021 also. And this year again, we are planning to open 50 to 60 franchisee stores in interior markets, tier 3, 4, and 5. We expect there is a reasonable opportunity potential where we can reach to our customers through this penetration.
Mr. Gupta, if you see currently the unorganized market is approximately 75% of the production in the country. While most consumer brands actually feel that there will be a shift to organized players from the unorganized sector, do you also echo the similar sentiment?
Means we are working towards this. You know, Bata is known for the quality product. If you compare quality of our product versus unorganized market product, means there is no comparison. Our customers are with us for last number of years. When they feel comfort, then I have my doubt that they will go away for cheaper product. We are expecting that during 2021 and years after that, we are expecting increase in our market share, and there will be a reasonable growth in our numbers.
Mr. Gupta, could you also tell us about the volume growth trajectory that Bata is looking at going forward?
You see, when business is less due to pandemic, then growth was not there, neither in volume nor in value. However, if you see our last quarter, means October, December, there was a growth in wholesale category about 3% compared to the previous quarter, compared to the previous year, same quarter. However, retail pairage growth was down. It was down by about 17-18%. But now we expect with the opening of offices, opening of schools, we will gain in volume also at the same time with turnover also.
Right, Mr. Gupta. Well, it was great catching up with you this morning and figuring out exactly what the challenges were this quarter. From what we understand, it looks like the road ahead seems a lot better. Thank you so much for giving us your time this morning. On that note, let's slip into a very quick break here and buy now, sell now. Stay tuned. We'll be back in just a minute.